Good morning and welcome to our earnings season daily special. US earnings season has kicked off on Wall Street. Yesterday we had very good numbers from JP Morgan in particular, but also Citigroup. Wells Fargo were a bit of a disappointment, but they are in the phase of turning things around after a number of problems at the bank, mis-selling scandals, and of course a brand new CEO in Charlie Scharf. So JP Morgan in particular, very strong fixed income trading. That was up 84% in the quarter. Also good numbers in terms of the net interest income, which although down 2% was maybe a bit less than people had expected, just because maybe the way rates and the yield curve have moved have not been entirely against the bank. Although rates are lower than what we thought they might be a year ago, the yield curve has picked up again and it's not inverted or flat as it was in the summer. So decent numbers, well in fact very strong numbers from JP Morgan, let's be honest. Best and most record-breaking profitable bank annual earnings ever. So JP Morgan doing very well. I think that bodes quite well for Goldman Sachs. We'll be looking to see whether or not they pick up this the baton in terms of the fixed income trading. They're due later, of course. JP Morgan did very well in fixed income. That means Goldman Sachs figures may be better than expected. I heard some strategists yesterday talking about a long Goldman trade being a neat sort of trade going into the earnings. Also bear in mind Goldman Sachs stock has massively underperformed JP Morgan for the last couple of years, so there could be some upside there as well, depending on just how these numbers come in. Q3 was a slight weak number in terms of EPS versus expectations, and it was down sharply from the year before. Lack of IPO activity in particular hit Goldman. Investment banking revenues were down 15%, so we need to see an uptick there. Look to see if that bond trading number for JP Morgan correlates to what Goldman is reporting. There was also a slip in the return on tangible equity to 9.5%. Q4 EPS estimate is $5.50 based on 22 estimates that we have on our platform. Also reporting today will be Bank of America. Interesting to note, we've had a couple of upgrades. There was one downgrade on the 6th, UBS downgraded on the 6th, price target $36, but Barclays have upgraded the stock lately with a price target of $43. So Bank of America also coming across with its earnings today, so keep your eyes open for that. You can keep track of them all in the platform. As I say, you've got the analyst recommendations, which are a pretty good bet, and then in the platform search for example Goldman Sachs, and then you can find in the financials you've got forecast EPS $5.50, ranging between a high of $6.20 to a low of $4.50, number of estimates, forecast revenues, and then a breakdown of their previous numbers as well. You'll also find important sentiment data, for example news sentiment data here, which on Goldman Sachs, which apparently says it's bearish. So that's it for the moment. We'll bring you more. The Walk on Wall Street will run down some of these numbers from Goldman's and Bank of America and any other interesting earnings that we get coming across the tape. But that's it for now. Thanks for watching.